investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Monday the 3rd. Okay, let's get out of the way. Got it. The 3rd of November, first trading day of the month, and we're looking at the Dow down 182 at 47,379. Now, this is, I need to go through this very carefully because we've had it before, where in the Chapman methodology, almost always you get Ds in a buy mode, and then you've got to assess to see whether or not you're going to have some kind of a pullback or whatever. But have a look at this before I sneeze. Nice loud sneeze. Sorry about that. Okay, so look what happened here. Way back December, or just about a year ago, December the 4th of 2024, 45,073. That's where we get to, and it goes to peak C, and we're waiting for a peak D. The MACD turned down. The stochastic was fabulous, and then it went below 80%. The on-balance volume already given a turn down from that peak B. The 9-period moving average took 1, 2, 3, 4, about 6 sessions, and then it turned pink, and it went down sharply. I don't know if we've got the same thing right now, but I warned my subscribers. I said, there is a chance, and it's just a chance because normally you'd anticipate, and look how many peak Cs there were. Look, you've got the Dow goes to, I've got this now as an possible alternate count, G/C. I have to consider it because it went to the inside track repellent zone and it got dragged down. But the line is over the 14. The MACD is still very strong. The stochastic is still at 81%. On-balance volume is good. Yes, the relative strength is pulling back a little bit, but it's at recent highs, and the weekly chart is still fabulous. All right, and with that said, let's go to the S&P. Same thing. S&P went to a leg C, but it could be an alternate count F/C. Now, I do this in the Chapman methodology just to show you that if from the starting point of the last buy signal at 6557.58, and that was on the 10th, I think, the 10th of October, that low did not go below the starting point of the instant restart right there. And it said if it went below 6483, you'd have to call this a C, but now there's a chance you can call it an F/C. Wow, that makes it a little tricky. I say tricky only in the sense that we've been raising some cash. We've put some money to work. A couple of stocks that we wanted, one made some money, one lost a little bit, and today we just got taken out of one that I think it's kind of a tell on some parts of the low-priced, the lower capitalization market, in the sense that it is in the These are big things like axles, all stuff that's really pertinent to the economy. And this one took out the stop that I had. It could still land up doing very nicely on the day, but our stop at least was taken out, and that's a pity. So I'm looking at this and I'm saying it's becoming more and more difficult to find things that are really just about to break out and start new moves up rather than complete them. So the S&P is now up 6.36 at 68.46. The QQQ had a very nice open, and now it's pulled back a little bit. It's up 3.50 at 632.53. Wow, that looks like it wants to get to the 6. You see, it's so much easier to get to 637.01 when your high today was 635.82 than it is, say, for the Dow to get all the way to 48,040. And here it is at 47,395. Wow, I mean, that's 100. That's, wow. I mean, that's a lot. That's about 900 points, 800 points. That's a long way to go. So I don't know what's going to do it. I don't know what's left in the Dow that's able to do that. So this puts me right now in a situation where I say to subscribers, all right, I can see a couple of things. We actually did do some buying this morning on the long side of a particular stock, and whoops, it just got taken out. Very tiny loss. And look at this. I just wanted to show you this. This is the IWM. Just have a look at this chart. Have a look at it on the left. See the 9-period moving average? Very close to turning down. The weekly chart has already spent 3 weeks not being able to get to its all-time high. And the all-time high, I've still got this as a leg A in the monthly chart, but the IWM is really starting to struggle. It's stuck in this big rectangle that I drew in here. It's just not going anywhere. Now, what are we going to be looking at? SMHs. SMHs are up 3.90 at 366.90. 372.78 was the all-time high. Wow, it's just a hop, skip, and a jump from an all-time high to go to a leg D. So here there's no other question. It has to be a peak C. So this is making it a little tricky. Let's just go to our E-mini right here and see where we are. E-mini made a high this morning at 6909.50 right there. That was a peak E in the 1-minute chart, peak D in the 10-minute chart, but it was a G/B, and there's an alternate count. That's one where it really did work, and it plummeted from the 10-minute chart, and now we're trying to find some stability and see if we can rally to the 200-period moving average in the 1-minute chart of 6890.80. Well, it trades in 25 cents, call it 75s. We're going to be watching this very closely because I think it's just getting very hard all around. Look at the XLF. This is the financials. XLF, I did it on the 1-minute chart. I didn't mean to do that. Sorry, let's get out of there. Go back to the E-mini right there, trying to rally. XLF is the S&P Select Financial. XLF. These are the biggies. JP Morgan, Berkshire Hathaway, etc. Down 53 cents, and it's been doing this. Look, the weekly chart's got a dreaded H pattern right there. It made its all-time high at 54.50, around about the 17th of September. And then what does it do? It retests it at 54.49, 1 penny lower. That makes a peak C1, peak C2 double top on the 23rd of September, and kaboom, it comes all the way down. It's at 51 right now. 3 points is not a big deal, but it is a big deal in the sense that your financials are not participating. I'll be back in a moment. Dow's down 212. S&P's up 6. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, we're back. So TBT, which is the ultra short limit 20-year Treasury bond ETF, has gone to a very strong leg B. Right off the 200-period moving average in the weekly chart. The dollar is rallying. Look, here's the dollar DXY. And it's very, I had this, remember I spoke about, I didn't even put that in. Let me just click that. I forgot to click it. Oh, that's dumb. New parallel, make that pink. Oh, that was right there. Look at this, right there. And it's the exact week. Look, I had this as your left side, right side price time match. I just forgot to click it over there. And there it is. There's your leg C. And it's in the right time, but it hasn't got to the point that I was trying to make before was the high of, if in this particular H to an M pattern, if the price rallies and goes above the 100.26 high of the 1st of August, that's the weekly dollar index, that's going to be very positive, and it should then target 101.62, the 200-period exponential moving average. And here we are on leg D. This could actually be a brand new leg D/B, because there's your peak C1, C2. This could be the start of a new move up. I'm just going to go one step at a time, calling it D. The target was this 200-period moving average of 100.04. Is at 99.99. Oh. We used to have, what is a restaurant around here called the 99. There's always this guy playing the piano there. But we also had something back in South Africa when I grew up there called the Choc 99. And that was a little flaky, that little Cadbury's flaky. And you put it inside the soft serve. Oh, that was very good chocolate. Anyway, so let's get back to the market. A little difficult here. So a couple of things going on. So the dollar is rallying. The EUR USD is pulling back. Look, there's the dreaded H pattern, lowercase h. Took out the left side low and a very big arch formation in the weekly chart. Here's the Euro USD JPY, which usually travels in the same direction, not the same percentage, but the same direction as the dollar. Come on. Hello? Anybody home? There's a lot of buying, I think, going on today because it got a little slow. Yep, there's your leg D going to a peak D, A, B, overlapping, right? Oh, wait a minute. That was 153.274, 153.25. Yep, that's D. It's at a leg D, right? A peak D right now in the daily chart. That's the yen, doing very nicely. And I'm going to call this brand new A right there. E/B. I don't have to have the alternate count because I believe that this is telling me that I'm correct. In my analysis over the weekend when I did my overview for subscribers, I said, there's going to be some dark news. It's coming up. I don't know when. I'm not sure how we can get to new highs. It's quite a distance to go for the Dow. It should technically, unless I have that alternate count. And I'm leaning towards the alternate count right now. In the weekly dollar, I don't think that's an F/C. It looks to me like it's a C. Look, the technicals are just building strength. They aren't stalling. And yeah, you've got the stalling in the weekly chart. And if we can get through the Chapman wave inside track repellent zone on a monthly basis, just moving sideways, you would do that. We've already moved out of it. But if we can get in the yen, if the yen at 154.05, up 0.04 right now, can get to 155.80 or 156.20, that area, that kind of breaks out of the monthly chart. And a lot of this is telling me that we're getting to a point where I think there's little to the upside that I can see. I can see trying to get to highs, but I don't see much further than that. So that just says to me, be a little careful. So a question came in, where was it? Over there. So Microsoft evidently had put in a big purchase for the services of, and Microsoft's up 2.57 at 520.42, looks lousy after that. That was an alternate count, F/C, but absolutely now it looks like an F. So Microsoft has made at least a daily short-term top. In fact, by the end of the day, I might even say it's a sell mode. Right now, it's just a sell signal. But IREN, and this is not going to last. I can't see it lasting through the rest of the day. But it is up 9.43 at 70.20. It actually it's 75.73 on that purchase order. And that could be some kind of little topping action right here. Look, it broke out of this inside track repellent zone, made the cup. I didn't even put it in because I thought, that looks impossible. But there it is. There's your cup formation. Broke out, went to a higher high, but it might not close above the 74.15 high of the 15th of October. I'm getting a little cautious. Let me put it that way, right? Okay, so with that said, and this is Iran Limited, IREN, trading at 69.84, up 9. I think it's going to close towards the low of the day. That's my guess. And we're in it. Certainly, we're in from 22.80. So going from 22.80 to 75, double top 74.15, maybe double topping at 75. Today, 75.73. I'm watching this closely. That's that. Let's look at the next thing. And I wanted, in the den, Dash, DISH. So Dash is trading. This is DoorDash at 245.83, down 8.54. That's what we were looking at, the dreaded H pattern. Let me just show you what the dreaded H is, if I can find it. Where's my... I didn't put it up. So the dreaded H is where price comes down sharply and then arches over. And usually at a peak A or a peak B, it rolls over. And then what does it do? It takes out the left side low. How deep it takes it out tells you whether it's going to do a one-to-one to the downside. Look, there it is. Comes down, rallies to an A, and then fails and takes out that left side low. And it looks like it's going to be a deep one, and it could go one-to-one to the downside. You've got to be real careful with DoorDash. And that's the H pattern, dreaded H, we call it. Okay, that's the one thing. The next question was, where did it go? I can see it right here. Oh, yeah. The question was, NVIDIA. Do I think NVIDIA is making any kind of a top here whatsoever? Okay, let me put it this way. The high that was made last week, Wednesday or Thursday, at 212.19. That was on the 29th, 212.19. Let me just type that in because I think that's going to be significant. On 10. And now I completely forgot what I said. I didn't say the 12th, did I? 212.19 on the, well, let's call it the 28th for now, and I'll come back to it, 25. Right there, 29th. On the 29th of October, the way it looks, the way it's kind of starting to struggle a little bit, the MACD is still very strong, and it had been still expanding. The RSI is still looking very good. The stochastics at 79, that's under 80, which is still okay. On-balance volume did pull back, but that price is way above the 9-period moving average. The 9 is way above the 14. So all I can say is I think that the market is going to tell us, because if NVIDIA, by Friday's close, if it's taken out this left side low of 201.41 that was made on the 30th of October, there's a good chance it'll test the green 9-period moving average, which at this point is 198. It'll be lower than that, and I'm watching it. But I am going to put in the usual thing that I do, which is the rectangle formation, and it's fighting with a cup formation, and that's fighting with an arch formation. So stuck in a rectangle, a lot of evidence will be given by Wednesday, if even on a very short-term basis, if it slips under 205, or if it can break above the 209.45 high of the day. I'll be back in a moment. Basil Chapman, Tiger Technicians Hour.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
So let me just go through this. Let me go in order. So the first one that we're looking at is Wing. I believe this is called Wingstop Inc. Yep, this is the restaurant, right? Must be. Let me just check here, just make sure. I go right here. Okay, Wingstop. So Wingstop does. Not now. Flavor wings. This is the chicken wings, I think. So Wingstop, look at this dreaded H pattern in the monthly chart. If it takes out this left side low at any point, this left side low of 204, round number low that was made April before the big rally to almost 400, nearly doubled. Now it's come all the way back in this almost Eiffel Tower look-alike. And now you've got like a pyramid action in the weekly chart. And the 200-period moving average is at 249. Wow, I don't know if it's going to see that again. Last week it was above it. Now it's way below it, and it gapped down. Oh, this looks terrible. So I'm just looking at this, and all I can say is that I would not be surprised. 221.71 was the low. 221. How can that be lower than that? That doesn't make sense. Oh, 204. I must have hit the wrong thing. 204, round number low on the April the 25th, and it's trading at 211 right now. If it closes under 204, that's a big problem because it invites action down to this low right here of 2 years ago at 182.08, and that was November of 2023. I just be real careful, and it has to, in fact, it has to spend November pushing towards 245, 250 to make any changes in the downside at all. Next question came in about Ford. So Ford's very interesting. If you look at the monthly chart, it's really just stuck in a huge range, but in price it doesn't sound like much. But when you're going from $9, maybe $8, all the way to the 13, 14 area, and then down again, it's a big percentage. But it's just stuck there. Now, if you look at the weekly chart, it did have, I said I'm going to circle this, but I don't think there's any chance that this is an instant restart in Ford. There's just too much going on in the auto sector, but I did have to circle it because within 3 bars, it went to a higher high. But really, at this particular point, you see this gap, and I spoke about this gap about 2 weeks ago. I said, 1271 was the low, and 1397 was the high. And it just says to me that within this, if it can take out the high and go into the 14s, that is really good action. But if in the next 3 or 4, 5 sessions, I said, if it can't do that, and instead it actually gives everything back, which it hasn't done yet, but 12.71 is the number to watch. A close under 12.71 says that was like, we can call it almost like a rogue wave. It's actually a right arm extension in the Chapman methodology, and a failure pattern. It would look like a little bit like the Eiffel Tower, except it has gone sideways. So right now, Ford is holding quite well. At 12.94, it's down 19 cents. But if by tomorrow it suddenly starts to slide, watch carefully, because this 12.76 is the 14-period moving average support, but the low that we're looking at is 12.71. If it goes under that, it'll fall that, and I think it's going to then take a long time, because what I'd normally do is I draw in. I can't do it just I'm going to do it, but I should wait until tomorrow. But this is the pattern that I'd be looking at, a lower rectangle that says there's a dreaded H right there that can fail, and you've got to watch it very closely. So what does it have to do? It has to get to the 1365 level, about 70 cents up from here, and then not pull back, but use that as a stepping stone to go into the 1280s, into the 13s. I don't know if it's going to do that. That's forward. F is the symbol. Our next question came in. I wrote it down over the weekend. Oh, yeah, HIMS. His Hims and Hers is coming out with earnings. I don't know if they've come out with earnings yet. I don't know what time they come out with earnings. I know it's today. 65.30 was that move to the upside. But look, sometimes charts tell you by their action just exactly what they're doing. Look, have a look at this as an arch formation. And I could go down to there, but just for the moment, Let's treat that little doji at the 200-period moving average in early September, which has a low of a very tiny candle at the low and had a beautiful move to a peak E at 65.30. And here was the low, 40.78. I would say a 20% move, a 20-point move, almost a 50% gain. And now it's come all the way back. So what I would normally do is I draw in the pattern that seems to appear to me as not obvious, but something to keep in mind. And I would go to this candle right here. After the D, you get the trough. And I like to use that if it isn't like a perfect D, left side, right side, price, time match. And even here, it looks like this is asking too much. I have to move a little bit further to the right. So I'll move to the right, and I'll go to this candle right here, the little doji candle right there. And then I'm going to go click. Now you see it's too far to the right. But I'm just going to leave it, and I'm going to say, if it arches over, that's just way too far. I'm going to do it over again. So I also need to do the inside Chapman wave inside wedge target support line, and that'll be right there to there. Okay, that gives me a clue. Now I can say, all right. So it's only got another couple of days, so I'm going to go to this low right here. Oops, I should have stuck with the first one, which is this low, the trough low. Keep to the right and go new parallel. Oh, I can't remember now. I don't know if I printed it out or not, what the question was. I think the question was, will it test the low of September? And the answer is, the way it's going down 88 cents today at 44.59. Has anybody know, does HIMS come out with any earnings so far? Got a break coming up. Maybe during the break I can check it out. Okay. No. I don't know yet. All right, I'll try to find out. But here's this arch formation, and it's coming down. Looks to me that the low that we were talking about would be hit this week.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Yeah, so here's your Bitcoin. I was worried about that. Here's the same thing. The traded edge pattern straight down, arches over, starts to turn down at the peak B. If at any point in this week, if it just takes it out and then closes above it, that's one thing. But at 104,255, the low of the 17th of October, I've been very nervous about this. I think that Bitcoin is just struggling. Peak D in the weekly chart, double top. Here's one where I had to consider it not an A but an E, and it turned out to be an E. So this pattern now says that alternate count is viable for this particular phase, especially when you're looking at so many stocks. I mean, for instance, look at this. This is Iren, IREN. Look at it. It was up 12. Now it's up 6. So even this can't hold the gains, and that was a really big order that they had. So I'm watching this very closely, and I'm just suggesting to you this is a period that's going to be fraught with whippiness. I don't know about making major lows or anything like that, or even going back to all-time highs and holding. I think there's a chance that we test the highs, but I think at the same time, it's just a very choppy period, because I think if you look at it politically and economically, we're in a quagmire in many ways, because what you would consider to be the norm, there actually isn't a norm. That's number one. Number two is when either CEOs or presidents start to get unfocused, when they just do too many things, which is kind of what Trump is doing right now. The focus is not quite the same. And that makes me a little worried about this particular period. That doesn't mean to say, look, the S&P is only down 3. It was up. We're talking about an instrument that was at 69.09, and it just tanked down to the, what was the low today? 68.49. That's a big move down. But I'm just looking at this, and I think it's part of the choppy, whippy action. Question came in, CIFR. Can I look at that? Sure can. CIFR is, I did this recently, right? Yeah, Cipher Mining Inc. Had a big, must have had earnings today. Peak A, peak B, double B there, right there. 22 round number high, and then what does it do? It goes to 21.90 on the 28th of October, and today pops up. So let's see, peak D, EF if you continue it, but this looked very much with the 9-period moving average so strong. I'm going to call this a G/C right now. Acting very nicely considering. There's a gap today. Was it earnings? I'm not sure. And in the monthly chart, peak F, leg F. And there's only a leg A. In the monthly chart, that was a weekly chart, leg F. Yeah, so the question is what? The question is, where did it go? Can you look? Oh, you're long. Yeah, I would stay long. I tell you what I would do. Just because it's just the chart pattern itself is suggesting this is almost like IREN. I would take a little bit off right now. I wouldn't be afraid that I'm going to lose another big move to the upside. I think the upside is kind of limited. I'm surprised it actually hit 25.11 when it was trading at 20 to 21 just a week ago. So I would definitely take a little bit off, and I'd wait to put back into this area. This is cipher mining. So I hope that helps you. Next question came in. GBL, thank you. Bye. Okay, so General Electric. Yeah, General Electric has had a really massive run, had a double top, 316.53 mid-October. Then on the 27th, I think it was, 28th, it went to 316.67. I mean, 14 cents higher. And now it's struggling a little bit. I think that it's been fantastic, and it looks like it could do a little digestive phase here, even if it pulled back into this rectangle. And even it went down to the low of 294, was it? 294.80. It's trading at 307.94. Yeah, you could do that over the period of November and build strength for maybe a move up, maybe December, who knows? But I just think it's getting a little toppy in the sense that the chart pattern here that I'm looking at is one of those of the rectangle family, and it's the arch formation. It hasn't turned down significantly yet. It could still go sideways, but I'm looking at it and I'm saying if it closes under 304.10, let's say 304. It's trading at 307.62 right now. 304 in the next couple of days, then it's probably rolling over and it's going to go a little bit lower. But it's still acting, for a weekly chart, still fantastic. Question came in. Oh, there it is. Robinhood. All right. Of course, we can't go anywhere without Robinhood. So this is a very sharp move to the downside in candle terms. Big red candle. And I put in the arch formation at this peak B. Now it could become a B minus, but it hasn't yet. 143.28, down 350. It did have a nice bounce today to 149.41. It was holding. I mean, I don't know what happened last week on Friday because they had a good session. But here it is. So let's go back to our chart patterns. You see this rectangle in the weekly chart? If it goes up in almost a single move, and then it stalls at just under or just above, usually it's just under the previous high, that would be 153.86. That had a 153 round number open on the 6th of October and then slumped down to 120.88. Well, this is the pattern that I'm looking at. And what is the pattern? It's this pattern right here. I'm going to go to, here we go. It is this pattern right here. So I have webinars in my newsletter. If you subscribe, you can go to them. I have the discussion on long, narrow rectangles. We've seen so many of them lately. I've discussed them live on the show and also in the den. And the large rectangle. The large rectangle says if you come down sharply and you start to move up and you start to make higher peaks and higher lows, mostly higher lows, you can go peak A, peak B, peak C, and even the D back to where the previous this is called the flagpole high was, and then you got to be careful, especially if you take out halfway of the rectangle, or it does it in one big swoop and then arches over. We've seen it a couple of times now, and this could be that very pattern we're looking at there. You got to be careful because it becomes the dreaded H. Even if it makes a higher high, it becomes the arch of the dreaded H. So I'm going to type that in right here. There you go. Look at that. there. And we are, and I wouldn't be surprised if we're doing this. Gosh, we've had such fantastic rallies in October that you can expect November to be choppy. I don't see why not. I'd prefer that. I'd like a rest period right now. Sideways would be great. All right, so that's Robinhood. So Robinhood, the 153.86 high, I think it's going to be tough to break. It certainly could do it, but if you've got gold, look, gold has done the dreaded H once, and now it's about to do it again. If gold is stalling, and Bitcoin, and these are your players in the Robinhood crowd, a lot play the golds and a lot play the Bitcoins, or in the Bitcoin area. I think this is a problem, and I think Robinhood is going to pay the penalty. So I think Robinhood is going to come down and test 135 very soon, rather than make an all-time high. I'll be back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
All right, folks, so we come back a little bit. Dow's down 235, the S&P is down 280. Let me just check out in my Dow. So Amgen is up to... What is tanking like that? Something's tanking. Coke is down. Boeing is up 370. CVX is up. CVX is down. Microsoft's up a little bit. I'm not sure. I think it's a total amalgam because Procter & Gamble and Sherwin-Williams are down. So is Honeywell. A lot. Merck's down. Travelers is down. Yeah, okay. A lot's down. JP Morgan's down. So I'm watching this closely. So let me just make it clear. I'm very cautious. We've raised cash. We've raised cash two ways. We've raised cash. We've taken a little bit off our good gainers. But at the same time, we also had a couple of positions that we put on, and they got stopped out. A couple for small losses. I needed to know that they could participate, and if they didn't participate, that's just something that it's a market, something that I'm monitoring. But in the meantime, back at the ranch, I don't know what can actually make the Dow go to a new high, because it just seems to me, from looking at them over the weekend, these Dow stocks, you could do it, but you need to have follow through. Microsoft was looking great, and now it's pulled back. And a number of stocks, CVX, this is Chevron. Chevron was looking very good. Caterpillar was looking good, and now it's down. So Chevron is now down. Yeah, you got to be careful. Caterpillar, come on, I need you. Don't do that to me. Good. Okay. So, yeah, and on Friday I had an outage. No, I had my backup was, there was a problem. So I just couldn't do the show. Meantime, back at the ranch, what we're looking at, we've raised cash. We're looking to put it to work more in the insurance area, and not insurance, just market insurance, by maybe buying, I don't know if we'll buy puts or anything just yet, but I'm watching this very close. I think it's going to be tough to hold new highs. You can get there, but to hold is going to be another question. I'll be back tomorrow. Have a great